Welcome to the October 14th, 2019 Advance Report for McGowanGroup clients and NetWorthRadio.com listeners. I'm Spencer McGowan, President, McGowanGroup, and your financial weatherman with your weekly YouTube fast-paced tour of the global financial markets. And yes, we'll start with the Dow Jones Industrial Average. What was significant this week? An end-of-week rally, and you guessed it, it's on the news that there's some sort of progress in the China trade negotiations. The Dow, of course, moving up hundreds of points. If it's a bad press release or a leak out of the negotiations and it says Xi and Trump don't like each other, it'll go down some and then it'll go right back up. And we're back at 27,000, where we've been since January of 2018, range bound, as Alex Tolene, our head of trading and the prophet on NetWorthRadio.com, predicted. We are still range bound. That's your diagnosis of the current market. That's 22,000, that's 27,000, and we're stuck in that range till something blows us out of it. What could it be? And it might be to the positive, because we just had a bear market cycle right here. First bear market in 10 years, 08 and 2018, fulfilled the definition of a 20% decline in the major indexes, which is that dreaded bear market. Well, we just had one, and we've recovered to about the high end of the range. What's going to happen in earnings? That's what drives the real value of companies. Here we are. S&P 500 costs about $3,000 per unit right now if you bought that index, and it makes about $40 per unit per quarter. That's about $160, about 18 times earnings. Well, notice that earnings went to 40. This was September, anticipated by the new market highs at that point. Then we had our first bear market. Look at that. It corresponded exactly to what the earnings did. Wow. And we're flattish right here for the current quarter. Can those companies fulfill these projections by analysts who do tend to be too optimistic? But they're thinking $50 out here by the end of 2021. That's an amazing progress. If we went from 40 to 20, that is 25% growth in profits forecast. Well, if they start to fulfill that, then you could see new highs on the Dow, especially if Xi and Trump decide they like each other again and announce they've saved the world. That'd be a great narcissistic press conference, and the Dow might explode upward based upon the current trading patterns. But next week begins earnings season, and we'll see if these companies can begin to fulfill those earnings increase that are forecasted in their quarterly net after-tax earnings reports. This is actually how investors have done. Dalbar takes all of the mutual fund flows, who went to cash, who bought stocks, who bought bonds, what dollars flowed, and they come up with a real measure of how investors did in mutual funds over the last 20 years. And the results, not good. The average investor only 1.8%. McGowan Group's been tracking over that time period, and we're closer to a 7%, by the way. That's on the website. It's between 6 and 7%, depending on how you count it. Some time periods more and some time periods behind. But we actually post how our clients have done. Unlike most advisory firms, we want you to know what's the net client experience after fees and what do bear markets and recoveries look like. It's all right there at NetWorthRadio.com. Well, inflation's run 2.2, more than the average investor has made in their portfolio. Homes, they're going up about 3.4% for the 20-year period, and we're back to that. According to Case-Shiller, we're about average on home price appreciation now. We've had our nice residential real estate run. Stocks have done 5.6% over that 20-year period, in part because it began before the tech wreck here. Well, bonds have averaged 4.5, not that much different. Blends about the same. Oil's about 7, and gold 7.7. REITs take the cake. Real estate investment trust, dividend companies that pay the cash, they're about a 9.9%. We like dividend companies, and I'll show you which ones as we get further in. All right, Congratulations, USA. This is amazing. 115 trillion net worth for households, a 35-year low in the leverage ratio, according to Alex Tolin's research this week. And that's an amazing progress. The peak in household net worth was 71 trillion, now 115 trillion. This is an amazing increase in the wealth of the United States, and you can see 25% homes, 21% pension funds, financial assets 40%. Well, and the debt levels actually at record lows for modern history. Congratulations, U.S. households, for an all-time high, 60% above the peak of '07. Fixed income. Who wins over the 15-year period? High yield bonds is 7%. Munis about 4.4, and we think they're expensive right now. Then we go to all the asset classes. REITs at about an 8.5, consistent with what we just reported. Large cap, that's big U.S. stocks, S&P 7.8%, high yield 7.3. Commodities, the worst, at a minus 2.5. Because they're heavy and hard to store, I guess. And here we go. Well, this is a sector we believe has the most promise for dividend companies. We like global high yield, we like good safe cash at about 2%, and we also like energy infrastructure almost in equal parts as a neutral weighting. But come down to the McGowan Group at the Crescent in Dallas, and you can get your plan, or we can do it by conference call and WebEx. Just go to networthradio.com, fill out that preliminary client questionnaire, and we'll get started for your free 1-hour brainstorming session. All right, if I put $300,000 into 18 energy infrastructure companies back at the end of the crisis, then I would have grown to 1.2 million. That's a pretty good ratio for a partial allocation. And look at that, that's 4 times the money. This was 2014, oil was 100, oil hit 27. This sector does move with energy and does have price risk. As you can see, that portfolio went half price, and it's still not much more than half price if we go all the way back to '06, but it pays 7% yields. Earnings have been growing. This sector is one of our favorite to watch. When it climbs up off the pavement, this could be a potential double based upon their current profits, and it's not without price risk, but you get a good dividend. I'm Spencer McGowan, your financial weatherman. Thank you for joining us, and get to networthradio.com to fill out your preliminary client questionnaire. Thank you for tuning in to our YouTube channel. I'm Spencer McGowan, President, McGowanGroup, your financial weatherman. We sponsor each week networthradio.com broadcast. That has the charts and graphs, many of which you saw today. We also sponsor this YouTube channel. Be sure to subscribe for fast breaking news, an alert when we post something in a market condition that may have changed. Our goal is to help you as an investor make the right decisions at the right time. And that's part of what this YouTube channel is about, as well as networthradio.com. I am well served with a team of 10 people, including myself. And that team that cares is actually made up of people who devoted to your net profits and your success, as well as excellence in service. If you want an educational experience to follow this up, get to networthradio.com, themcgowangroup.com. Right here, we disclose our net client experience all the way back to 2001. What that includes, the bear market cycles of '02, '08, 2018, and the recoveries through the most recent quarter. That is true education of investors, and exactly how our clients have done, disclosed right here. Further disclosures, value at risk of loss. Yes, investments are going to fluctuate. That's part of the reason for this broadcast. And that can actually work to your advantage. We'll build that into your plan. So I urge you to go to networthradio.com, fill out the preliminary client questionnaire, a free 1-hour brainstorming session by phone or at the Crescent in Dallas, and we will map out a multi-year plan for you and your family that's appropriate. Just because we talk about a security on this broadcast or any securities doesn't make it a recommendation for your portfolio until you have that written plan. Thank you for tuning in today, and we'll be back next week as your financial weatherman.